to today's synthetic analysis with Deriv. Now remember the fact that I said synthetic analysis with Deriv does not mean Deriv only offers synthetic analysis, they offer several other things. Both the ones you know and the ones you don't know. Anything that is tradable, we have it on Deriv. Alright, so we'll be analyzing the synthetic market, which is available on Saturdays, on weekend, on public holidays, no fundamentals, just pure technicals. And of course, we're starting off with the volatility 75, 1 second, we'll be marking out our levels, which is this level right here. Alright, we're also taking out our eyes, this eye right here. So moving this way, good. Let's go to our 4 hours chart to see what that actually represents. Good. So you can see the market actually moved off our zone ahead. It actually moved off this zone. So we expect to actually get to this level. Then, if you can see the market breaking above this, you can actually think of looking for what's going on. Breaking above, you can think of looking for a long trade. So this is where long term comes in. But then we actually still expecting a bullish move up. So you go to the 15-minute chart because remember, volatility 75, 1 second is actually very volatile. So a minor move or big move is actually could be a major move to some persons. Alright. Now this is the previous high it actually formed. Then we got this level 2. That's banana high and looking at it from here. So let's check out the VIX movements. My since already here, so that means we're going to be entering somewhere around here. Let's see if maybe it's up to 1:2. Alright, it's actually up to 1:2. So let's wait. If the market actually close this way, they can scalp it to this level. Remember I said scalping, you just take few profits and you're out of the market. But then the main entry comes up. If the market happens to break above this, then we can actually look for long trades. But if we get showing signs of rejection, they can actually look for short trades. So our entry comes up mainly at this level, but then for the scalpers, if this happens to close rejected, they see it a bullish candle fully closed, they can actually go long on it. Stop loss below that rejection, just like where it is right now. Your take profit should be somewhere around the 4,200 level. So this is a perfect trade for entry. Alright, now let's go to the next one, which is 75 volatility. Alright, so volatility 75. Let's go to the 4-hour chart to see what really is going on the 4-hour chart. On the 4-hour chart, I see they are seeing some entry. We actually took a short trade yesterday. I think somewhere around this level on 15-minute chart. Let me back to 15 seconds. I can show you clearly. We took a short trade on 15-minute chart, and that was somewhere around here. Where the market got to this level. They took the short trade, then we targeted this level, and actually played out well. Now I can actually see it now. Currently, it seems as if it's breaking that level and they're trying to form a new one. Oh. Let's pick this. So you can see this breaking this level and then to form a new one. So let's see if actually this is gonna hold on the 4-hour chart. That will be going long again. But then judging from the candlestick formation, the candlestick formation right now are not really confirming a bullish setup yet. Not yet confirmed of a bullish setup. Probably it's gonna just go to test this previous high right here. Then after that, it can move back to bearish because looking at it, very much bearish. If they went back here as a minor pullback, they can see then maybe going again to show some sign of to check some sign of bullish momentum, of which if it doesn't see, they're going to continue bearish. But again, maybe people like actually went short from here, got and started taking their sell trade, which then left with more option of the buyers. I can see that trying to see if the buyers are really many enough to outshine all these bearish move, right? And that happens, that going to be confirmed. You have to break above this, but this is another place where our sellers will wait for the market. You have to break above this previous level, sellers are waiting for the market to think of going long to this next level, right here. Alright, so that's that for 75, 175. So let's go to the boom index where we started with the 500. Okay. Alright, on the boom index, we seem to be seeing some bullish move. You can see it making series of higher highs ahead. So that means we're looking for bullish trades. Let's go to the 15-minute chart. Let's see what the 15-minute chart actually does for us. Alright, so here is the 15-minute chart. And of course, we have a level right here. Remember this 15-minute chart. So let's focus on this candlestick formation. This candlestick actually confirmed, for now it's not confirming any bullish movement. You can see candlestick actually get confirmed, just something like this, a good spike like this can actually take up, okay, going long on it. But otherwise, they are not going to be going long, except it happens to, maybe if it continues the way it's moving down here, they can actually take up long after this level is sticking out. But then if it go bearish, that's going to be only above this. That's where the bearish setups comes in. Alright, so let's go to the next one, which is the still the bond. That's still other boom, but then I'll be looking at 1,000. Okay, this is actually a bearish move. So let's go to 15-minute chart. Let's see if we can see any recent bearish setup. Alright, so for now, no any bearish confirmation. So until you see bearish confirmation, that's where you can actually go short on 1,000. But for now, there's no any trade confirming the bearish. Remember, I look for only bearish setups, not bullish. So let's see if we can see bearish setup. Probably when it gets around there, then we can see it starts showing signs of the bears ready to continue taking this market short. We're going to go going short. Otherwise, if it's above this, just let the market go for today. Definitely remember tomorrow we do this again. So you can still do it, come back here tomorrow to see what tomorrow has for us on the synthetic market. So let's go at the crash representative of the cash 100. Okay, on cash 500, it seems like it's been bullish. Let's go to the 4-hour chart. What's happening 4-hour chart? Yeah, actually a very good bullish trade right here. Before I go to back to 3-minute chart, let's see. Do we see any recent bullish move for us? This is actually a good move. But then you can see that actually, let's see. I actually expect the market to actually pull back to this level before going. What's going on? Alright. Okay. So we don't expect the market to go below this. But if we're able to pull below this, they can actually see increase our entry. So probably maybe take another trade again around there. But we don't expect to actually go below this level. If you're able to go below this, that means you still want to continue this range market has been moved for some days like here. Alright, so that's for cash 500. We are looking for a bullish setup, just right here. Okay, so let's go to the final one, which is our cash 1000. And then to the 4-hour charts. On the 4-hour chart, it seems like we are seeing some bullish move. So let's go to 15 minutes chart again to confirm. Alright. These targets, my stop loss will be below this. Then take profits 1:2 is good. Alright, so here's my setup again on Crash 1000. I think today the synthetic market seems to be very favorable compared to the normal FOREX markets. Alright, so please always remember, no matter how good the chart looks, you can still go the other way. So please ensure you don't risk more than you can afford to lose. Your stop loss should be where it is, and of course your take profits you can choose to leave it open. You can still choose to just put the take profit at least 1:2 to reward ratio. Alright, that said, I wish you a profitable day trader. Please ensure you stay. Ensure you trade safe, and please, I've always said it over and over again. Don't risk more than you can afford to lose.